Ladies and gentlemen, we just got the CPI data for February this morning, and let me tell you, it is not looking good, and we have to break it down in this video. We have to go over the categories, talk about how the inflation is looking across the board, and we have to break down how the stock market's doing. We have to take a look at some charts and go over 3 stocks in particular. And before we even do that, make sure to get your free money from Moomoo. Link down below. Deposit at least $100 with Moomoo, and you could get up to 5 stocks, each of which could be valued up to $3,500. And yes, there's more. On top of the 5 stocks, you get a free share of NEO guaranteed. So get your money. Link down below. And now let's talk about the CPI data from February, which again was not good. We got record high inflation. Well, I guess not record high, but it's the highest number we've seen in 40 years. So the consumer price index for February, and let me show you guys this right here, increased 0.8% in February on a seasonally adjusted basis after rising 0.6% in January. That's what the U.S. Labor of Statistics reported today. Over the last 12 months, the all items index increased 7.9% before the seasonal adjustment. And like I said, this is the highest level in about 40 years. Actually, over 40 years since January of 1982, which is nuts. And excluding food and energy, both of which moved sharply during the month here, core inflation still rose 6.4%, in line with the expectations, but the highest level since August 1982. So core inflation is at 40-year high. You know, the all items index is at highs. So this is looking pretty freaking insane, right? Pretty insane. And if I show you all this bar chart, you can see now we're almost breaking into the 1% for the individual months here. You all can see here, this shows the 1 month percent change in CPI. The highest months were June, October, February. We just hit the second highest month, 0.8. We had 0.9 in June, October. So I think in March, with everything going on right now, gas prices going crazy, food continuing to go ballistic, I think there's a good chance that we go 0.9%. Even 1% plus month-over-month change, and we're going to get record high numbers of inflation for March as well. I mean, at this point, guys, the proof is in the pudding, and if I show you all these different categories, let's go down, and let me make sure you all can see me here. There we go. Now you guys can see me, rather not see me. You can see the chart, right? Who cares about me? We want to look at these numbers, right, guys? So let's take a look. All items, like I said, 0.8% in February. That's 7.9% over the past 12 months. We have food overall 1% in February versus 0.9% in January, and that's 7.9% over the past 12 months. And what I noticed here when I was looking at this report this morning, we have food at home at 1.4% in February. It was 1% in January, so that's a big increase. In fact, it's the highest that we've seen since August. At least that's how far the data goes back that I'm seeing right here in front of us, right? So food at home is getting very expensive. It's 8.6% for the past 12 months. And food away from home, get this, guys, is 0.4% for February. It was 0.7% in January. So it looks like food away from home, we're seeing people maybe not going out as much to eat. They're not putting their money to work because inflation is burning their purchasing power. So these prices aren't going up as much, food away from home, but they are buying more food at the grocery store, right? So that's why we could potentially be seeing this move higher in food at home, if that makes any sense. So I'm looking at it at that from that perspective. When it comes to food, we have energy. Obviously, it's the most ridden with inflation at this point. We have energy at 3.5% in February. It was 0.9% in January. It's 25.6% over the past 12 months, which is nuts. We have gasoline at about, let's see here, 6.6% in February. It was minus 0.8% in January. I mean, these numbers are nuts, guys. And we have gasoline at 38%. We have fuel at 43.6% over the past 12 months. That was a 7.7% number in February, which actually declined from January. January, it was at 9.5%. So energy energy overall, it's continuing to see a lot of inflation. Who would have guessed, right? I mean, have you seen the gas prices lately, guys? Have you seen the price of oil? It doesn't surprise me at all, and it shouldn't surprise you either. We have new vehicles, 0.3% in February. It was 0% in January. That's 12.4%. We obviously have, and that's 12.4% for the past 12 months. We obviously have used cars and trucks, very high inflation in those, in that category, 1.5% in January, and it actually dropped to 0.2%, negative 0.2% for February, but still it's at 41% over the past 12 months. So overall, I mean, look, guys, the inflation, it's not transitory, and it doesn't seem like it's dying down. And I don't think it's going to die down in February. In fact, like I said, it's going to get worse, and that might continue. March, rather. Did I say February? I meant March. It's going to continue March, April, May, until we start seeing, 6, 12 months out. These next couple of months, it doesn't look like it wants to slow down. And maybe a year, maybe 2 years, yes, it will at that point. Hopefully, I really hope so. But for now, it doesn't look like it's slowing down. So that's a breakdown of this report here. Let's now dive over back to ThinkOrSwim and see exactly what the heck is going on in the stock market today, because we've had a lot of volatility. What else is new? The VIX is above 32 points right now, roughly. It's almost at 33. It's up 1%. And we have all of the main indexes here in the U.S. down a lot. NASDAQ's down 2.4. Russell's down 1.6. We have the S&P down 1.5. And the Dow's down 1.3. And again, the VIX is up over 1%. And we have gold up 0.6, back over 2,000 an ounce. And silver's up 1.6, back over 26 an ounce. And what we're noticing here, and this is VOO, but we'll go to SPY for the sake of the video because I always talk about SPY when it comes to the S&P 500. What we're noticing is yesterday's rally ended up being a bull trap. We failed to break out of the downtrend. We failed at the 180 SMA, and you all can see on this 5-day, 5-minute, we're well below the lows from intraday yesterday, which were around 423. Now SPY's trading at 420. And I think it's going to continue going down. By the looks of it, this might go down and test 414, 415, which was the low point from Tuesday, roughly. So watch out for that. Downtrend continuing on SPY. Same exact thing when it comes to Triple Q. Take a look, guys. This one's getting destroyed today. It's moving well below the lows from yesterday. Now we're going down to potentially test 320 again, which is where this ETF was on Tuesday. And you guys can see on the 20-day chart, like SPY, it's well within a downtrend. Yesterday's rally ended up being a bull trap. We got hit right at that 180 SMA. We're failing to break it, and it's not looking good. It's not looking good. And we have, again, the metals up, VIX is up. So that's kind of what I'm seeing in the overall markets right now. Nothing really crazy, nothing new out of the ordinary. It's just the bears continuing to dominate. And some stocks I'm looking at that are looking pretty good right now, all of these are pretty much energy or gold miners, right? So let's take a look at some of these. Number one is PXD, which is up 3% right now. This is a company that is an oil and gas exploration and production company. So they've been doing pretty well these past couple of months. You all can see the stock was at 125 back in the end of July, and we just hit 237, and it looks like the uptrend is continuing. We're breaking back over the 50 moving average today, as again, it's up 3%. And the uptrend, just point blank period, looks like it's continuing. We're holding a higher low after pulling back. We recently hit 249, pulled back to 225, sold off about 8, 9, 10%. And again, buyers are stepping in, uptrend's continuing. This looks pretty good to me. So that's one I'm watching for a move, maybe back up to 245, maybe 250 plus. Another one I'm looking at right now, which we've talked about a lot on this channel, is Newmont, NEM. This broke out recently above $80, and like I mentioned when we talked about it in that video about 2 days ago probably, I said it's probably going to pull back, and I also said to watch for support around $75, considering if you pull back on the yearly chart, 75 was the recent high from the middle of May. So I told you all, we broke 75, we ran to 80, we were overbought. watch for a pullback to retest an old resistance as support, and that's what we did. If you guys take a look on this 5-day, 5-minute, we hit 80, pulled back to 72 yesterday, a bit under 75, but ultimately recovered back over 75, and now we're breaking out above it. So it seems like NEM's respecting 75. It wants to rally off of it, maybe to go back and test 80, maybe even higher than $80. As you all know, this is an uncharted waters right now because it is at all-time highs. So who the heck knows where this leg up will take it. It all depends on gold and obviously the geopolitical tensions right now, the inflation that we're seeing. You know, this all plays a role. So we got to monitor it, and it's pretty risky, I would say, because if gold does see a sharp decline, let's say we get some good news in terms of maybe inflation, rates, this, that, the third, Russia, I don't know. You know, if we get a piece of good news and gold drops $100 an ounce, which could happen, I mean, for sure, this stock's going to get clobbered. A lot of the gold stocks will. So keep that in mind, just to play devil's advocate here. And another one I'm watching is ConocoPhillips COP, which is an energy stock. This one's up 3% today as crude oil. Let's pop that up. What's crude oil at? Crude oil is up 0.6%, nothing crazy. And we do see a bit of a head and shoulders on crude oil here. So watch out for that. Neckline's at about $1.15. We got to break out of that for this to continue the breakout. So going back to ConocoPhillips, this is actually continuing the breakout. Unlike crude oil's chart, you know, this looks great. It's above both moving averages. It's riding the 50 SMA right now. We're up almost 3% on the day, like I mentioned. So this looks like it's eyeing up 100, 105 a share. That's what I'm thinking. So nothing much else to it than that, guys. Other than that, this chart looks a lot like PXD's chart. They both look fantastic. So watch out for those two and NEM. And, of course, just keep an eye on the overall S&P and the triple Q on that 20-day chart. Very important time frame, in my opinion. So that's it for this video, guys. I hope you all enjoyed it. If you did, hit the like button, subscribe, drop me a comment. Feel free to join my Patreon if you want all my real-time buys, sells, call-outs, morning update videos. If you want more access to me throughout the day, all of that is on Patreon, link down below. And you could also get your free money from Moomoo if you haven't done so already. That also is linked down below. Deposit at least $100 with Moomoo, and you could get up to 5 stocks, each of which could be valued up to $3,500. And on top of the 5 stocks, you get 1 free share of NEO guaranteed. That's running till the end of March here, so make sure to get your money. Again, link down below. I'll catch you all in the next video. Thanks for watching as always. Peace out, guys.